Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Happy Canada Day. We're in a very funny week here, as various countries around the world, including Canada, have a holiday today. The Americans, they have their big July 4th holiday. The official holiday, I think, is Friday the 3rd. And I also heard that some markets are closing early, like banks and stuff, on Thursday the 2nd. So, in a weird sort of way, we're in kind of a funny little vacuum right here. And, what a surprise. Also, too, this is Brian's big celestial event window here, 30th first. But also, too, what I'm hearing is a lot of people are actually watching for this weekend. The 5th, 6th is actually supposed to be the catalyst celestially. But anyway, it doesn't really matter. Point of the matter here is obviously with sickness ramping up in the U.S. and then heading into this long holiday weekend, we could find that Monday, Tuesday, oh boy, we're going to have to do a lot of repricing. It might be a huge explosion to the upside. No sickness backed off, not really much talk about it. July 4th went pretty well. Everybody was relatively happy, whatever. Or, flip side, sickness is out of control, lots of social unrest through the July 4th holiday. And the market really takes a punch in the nose coming out of that holiday. But point of the matter here is we're kind of in a funny little vortex right now. So I'm not really reading too much into price action here, especially, like I said, with the center of the universe. Hell, Canada's not even open today. I mean, come on, people. Anyway. Also, too, that was the end of just an absolutely horrific second quarter. This is now the beginning of the third quarter, so we're going to definitely be seeing the first 2 weeks of the quarter. Also, too, the end of that first 2 week study is also going to be the July options expiry, the big monthly options expiry. So really, probably over the next couple of weeks, we should really just watch and see where the actual capital is going to flow. Give us an idea what Q3 should really look like. And then, to add insult to injury, there's also a big vote in the U.S. Congress about a third stimulus package, which it seems to me is pretty much a foregone conclusion with the ramping up of the sickness down in the southern U.S. So as a result, it's just really a question of it's a political football right now. As I had said previously, in years gone by, most of the time these stimulus packages actually fail on the first vote. But we'll see how this goes. Maybe they'll just ram it through here on the first reading this time, and the market should probably find some sort of solid footing off of that to launch our next leg higher. And as I said, I mean, hell, if sickness backs off and we have a really happy-go-lucky July 4th weekend, we might find that the whole damn stock market and risk on just takes another leg higher. Risk on definitely has the bid right now. The question is, can it hold on to the bid as we approach this weekend? And that's a big if right now in my eyes. Your chart deck that I like to keep this conversation relatively focused towards, U.S. dollar index coming off a chunk here this morning. Was this sort of pivot around that July 1st event? I don't know. Is this going to be, it's not going to be a classic sort of Gartley type pattern, that's for sure. I'm almost thinking it, and I don't know how to articulate this, but I'm almost sort of thinking like something along these lines. We'll see what happens. Only time will tell. Really, what should happen if this short-term trend does continue is we should see risk on and the U.S. dollar index itself come down and form some sort of pivot, and then maybe that's that. Oh no, the U.S. Senate is debating whether they're going to actually pass the bill. And then, this is probably on passage right here. All right, risk back on, blah, blah, blah. But if anything, I really like that sort of anecdote that the market right now is violently flat. So lots of back and forth in the range. Probably not going anywhere really in a huge hurry. And actually, I've seen that in a number of cases here today, so it does make sense to me. Continuing our recent sort of risk-on kind of thinking, stock market has gone to new highs here this morning. Oil did break up into Mountain Man level, and of course, in very normal, typical fashion, Mr. Mountain Man knocked oil back down off its perch, which usually happens. I would see this guy, Brandon, he would hit that 61.8 religiously, so really not a big surprise. I think we had just left this sort of phony baloney order here. Oh, and look at that. Actually, we should have gotten a fill there. So this trade should actually be open because you can see we traded up to the top of the gap. In fact, actually, it looks like we hit 78.6 there. That high was 40.58, and 78.6 is 40.60, so not quite. So 78.6 is your SOL. Had you had the order at the gap, which is probably, like the pro trader's trade level. I can't really do this very well here. Sorry, guys. That open of that candle there was 40.68. Did I get that right? No, that's not right. What am I saying here? Open 40. Oh, I beg your pardon. That's the close. Silly Brian. 40.37. So that high there, 40.58. So I think let's, for fun with you guys, let's go, what did we say, 40.38? Was the gap, something like that? Wow, way up there? No, that can't be right. 40.37. Oh, and I think it's because this chart's kind of screwy. Yeah. Anyway, doesn't matter. All right, so levels, peoples. I think actually they got a trade on here. So, let's see what happens. Maybe we can get stopped out a second time. Probably have your stop just above that high there. Okay, so risk on did in the oil patch did make a new high here today. Looks like we're putting in a bit of a doji here. We did have inventories come out. Crude oil inventories were drawn down. But interesting, the thing that caught my attention, which is a bit of a surprise, was the unleaded gasoline inventories actually were up. So clearly the consumer is not buying as much gasoline as people were thinking they were going to buy. Anyway, big doji. You should be short now from, I'm not quite sure why this number's here. But anyway, this is the fill that we got. We had the price at 40.37, but we got a fill here. Typical goddamn NYMEX. 40.21. Oh, those bastards. Anyway, so there you go. We'll see what happens. All right, so we'll see how that goes. Interesting how oil... kind of floundering there a little bit. The bonds, they made a new high yesterday. They're pulling back. Same thing with the gold. Gold had a pretty sizable pullback here this morning. But what's interesting about both of these is the pullback, while it did seem awfully extreme in sort of like a 5-minute chart, if you actually look at it, all we did was just pull back and do like classic Wyckoff checks here this morning. And I'd also, like I said, I'd be a little bit cautious about, actually, if you did get a break on a holiday session like this today. So like I said, a lot of bankers, they're just not at their post right now. I would be a little skeptical of this. Now, having said that, actually, I'm going to save it for another day. It's too long of a conversation. Pull back against a breakout, and if this market can't hold the breakout level on the gold, then we're probably going to come back, fill in the gaps down here, which would be perfectly fine, normal. Risk on, risk off, more conversation about that. Interesting how we did have the breakout on our Russell 2000 versus the Dow. But you can see they're pulling back here a bit here today. And we kind of saw that on the dashboard data. We did have a nice uptick on the fasts. The spread between the two moving averages is closing nicely now, and it might look something along these lines. You never know exactly what these crosses are going to look like. If this red turns into a nice well-defined W, then oh my goodness, get ready for a bull. But as it stands right now, I think it's still sort of like we're cleaning up here. But with regard to our little study here, interesting how we did not break out to new highs. Like notice that this move, when it ratcheted up, it went up against the new highs, then broke out. So, hey, I'm still a bull. So we ratcheted up through here, up into this level, and then we backed off here a little bit. So, I mean, it's not really a clear signal one way or the other than... the short-term inertia was to the upside there a couple days ago, and that seems to be waning a little bit. And considering that, S&Ps are working their way back up into reload zones, oil hit reload zones, so I don't think it should be a shock to see that happen. I think I've told you guys before, actually. The way I judge whether somebody's actually going to make it in this business is not by how much money they can make in a winning streak. And, what the hell? I mean, you could take all of your money, go throw it on 100x leverage long, and if you, spin the wheel and you're right, you can get rich really quickly. Does that make you a good trader? Does that make are those the kind of hallmarks of sustainability? Remember, I've been doing this for like 30 years now. And, it's fun to obviously tout when you make money and how brilliant you are. But like I said before, the way that I actually judge whether somebody's going to actually make it in this business, is really a question of how you handle your losses. And when you're wrong... will really dictate whether you actually will survive. So here's a really good example of I was wrong. So how am I going to handle being wrong? This stock, and it does happen in capitalism. You have to understand, you want to play this game. It's just the way the game goes. Sometimes you're right, sometimes you're wrong, and how you handle yourself when you're right and how you handle yourself when you're wrong will dictate whether you actually are here 6 months, a year, 2 years, 5 years from now. So this was, it's good looking stock, OCX, in the pharma business, all that kind of fun stuff. Had tests and stuff that were all getting ready to be produced, and I even put on Twitter charts like, gee whiz, this looks like a very bullish price chart. We had originally identified the market structure bottom. Market came back down into that level, and I pulled the trigger down here. So it's feeling pretty good. Things are rock and roll. My sell half on a double level was sitting like right up here. How close can you get, eh? And they announced 2 days ago, boom, clinical results, clinical trials. I'm not even quite sure, to be honest with you. Didn't go so well. So really the question here, and I've been in trades like this before where you're right and then the market comes back down and then actually goes down and stops out below your original risk level, and I can tell you, psychologically, it's a tough pill to swallow. So on this event here, I just simply said, I took my shot, I tried. The market basically came back to where I bought the asset, and I just simply walked away. I was fortunate. I worked my order at I think it was like 1 cent higher than what I bought it at. And I got out, and after commissions, small loss. Point of the matter here is, there might be a trade that develops down here, but if I was still in this trade and then it went underwater and maybe it stopped me out, you carry psychological baggage, And maybe I won't be in the position psychologically to be able to take the next W that comes in to, ironically enough, probably just fill in this gap. But now at least I put myself psychologically into a position like, nah, shit happens. I had a good trade. It was working in my favor. The market dumped on me. But at the end of the day, it's just going to show scratch trade. Big deal. And I don't carry any psychological baggage with me. So I'm going to be watching this, and I'll report on it, whether I do anything in the future. But long and short of it here's a really good example where I was pretty damn close to getting that sell half on a double order. Never got my fill. Just had to walk away at scratch. Next bus in 10 minutes. All right, heading on over to crypto now. Crypto's actually looking pretty good. And, considering our conversations recently about risk on coming back here a little bit, I guess it shouldn't surprise us to see Bitcoin catching a bit of a bid. Simple message in the daily brief here today was 38.2 should be tested on any kind of dead cat bounce to tell you whether this thing's for real or not, still to the downside. So we did that. We came back down into reload long zones. Actually, that would be off of there, right? So like, even there. Then came back up to the trend line. And day before yesterday, broke through the trend line. We even were talking about bull-bear battle lines. Then we consolidated yesterday. And what is really cool is if you drill down to like lower time frame, really interesting inverted head and shoulders. Now actually suggesting market could work its way right back up to the original breakdown level. And we even had traders on the site who were hunting W's in here. And I think that the trade itself was one of our classic L tangonators. In that you get basically market dumps into reload zones. In this particular case, big bullish divergence confirms. Then you let the market consolidate. In this case also too, we have a pretty good trend line break. Remember we showed you that a minute ago. Then you drill down lower time frame, and in essence you just want to take the first bullish market structure signal following that trend line break. So there it is there. Momentum's still pointing up, RSIs are up, Willie's not even stupid yet, and you can see the trade's just working away. A couple chaos levels, looks like we could run into some resistance against this original high, which would make sense. That's just basically the middle of the range. It's the POC. I think when I zoomed in on this range in particular, today we were sort of talking about, right in here. You can see there's a bit of a notch in the profile up top here. You can also see this is a value high, so a guy like Hogue, he'd be thinking about maybe hunting shorts up here. So that's basically what's happening here in the short term. Cute little long trade. There's nothing wrong with it. But remember, this is like lower time frames here, right? In fact, I don't even usually like to talk to you guys about lower time frames. So long and short of it here, probably rallying up the basic. And what was really interesting is there's actually a little bit of a gap off of this inside bar failure. So I could very easily see Bitcoin. Yep, there it is. Well, you can see the hole. So I could very easily see Bitcoin work its way right back up to this 9,600 level. Wouldn't surprise me one bit. Remember, violently flat. I think that's an absolute perfect description of this market state right now. So, with that said, bearish enthusiasm tempered for the time being. Still have on my insurance policies and things like Ethereum and stuff like that. I'm more than happy to, I guess I don't have that on this chart. I'm more than happy to pick up a couple more puts if we can get a nice rally right back up top end of the range. So that's what I'm watching for right now. Only other thing I would say, and interesting, this is sort of a side commentary in that the altcoins, and we spent a bit of time today talking about this. I think that the altcoins right now, which chart I want to show you here? Yeah, this one. A lot of them just look like this funny little sky coin that we told you about there a week or so ago. Just bumping along. So, I go through the rags, all the various different altcoins that we have on the books, and I mean, we got gazillions of them on the books, but so many of them just look like this. It's not really like, oh my god, go and buy that, you're going to make $1 million tomorrow. It's not really like, oh my god, that thing's at the top end of the range, you're going to get your head handed to you. It's, to me, honestly, this market just, again, violently sideways. This is the kind of thing where, yeah, we could just bump along here for another 6 months or so before we really get going in earnest. But my basic message to people is you can see tomorrow's bull market starting. I don't know whether you guys in the public pay attention to this, but there was a recent legislation passed in the U.S. that exempted, it did away with a lot of the Dodd-Frank banking regulations following the housing crisis. And in the fine print, buried on page 537,926, there's a clause that says that the banks can now get involved in cryptocurrency ICOs. Hello. So the writing's on the wall, people. The next bull market's coming. I don't know if it's this one in particular. I think on balance, the poop coins, the indexes, we're kind of just bumping up against top end of the ranges. But I'll tell you, if this thing can consolidate and actually break to new highs here, man, that actually becomes an extremely bullish signal. It's not here now. Right now, I would say we're still sort of fighting with this institutions put a top in here, and damn it, we still think there's a top in here. But you start seeing closes, especially on contracts like this. We, as a futures broker, we used to have an old expression. On any futures contract, show me a new contract high, and I'll show you a buy. It's just that simple. So, I don't know whether this is a new contract or anything like that. I think they have futures contracts, but don't kid yourself. These are not futures. They are forwards at best. If we start printing new highs here, that tells you that this shit's ready to go. I think that's probably everything I want to say here now. It's not there now, but we'll see. Maybe if we're lucky. Big breakout. Like I said, you might come back from the weekend and find we actually head into like another 3 or 4 months of orgy buying. I say this repeatedly, don't get into the business of predicting the markets. It's the market's going to do shit that you have no explanation why that stuff's happening. All you can do is just build your plan, identify the 3 unrelated reasons that get you to act, and then when they come in, you have to act. And actually, great example of this recently. And I look at this trade and I go, frankly, how the hell did I pull that one out of my butt? Because really, I don't know how I did it. But this is exactly everything I'm saying. I had gaps, I had trade location, reload zones. I don't know whether I had divergences in here or not. But I had original W's. I mean, I have so many reasons to buy. And I was just like, if I don't buy this, I'm really not doing what this whole damn school, this whole website, everything that I, rant about at length. If I don't do it, then I'm just a hypocrite. So the irony of it all is that I just had to get in there and have my order working and buy the damn stock, and you can see the end result. I don't know what's going to happen, but I'm just following my plan. Anyway, kind of a funny story there for you. Right, I hope you got some value out of all that. Today is Wednesday, so actually I've got class here in a couple hours. We'll head off and hang out with the level 3ers. I had a fun TRISOF group last night meeting, and of course, like I said, had a great daily brief as well today. So I think the site and all the various communities within the site are really firing on all cylinders. And it's a lot of fun hanging around TRI and just chatting with all these educated traders. Makes my life a hell of a lot easier. All right, everybody. Have yourselves a great day. All the best. And bye for now.